If I told you that waiting 1 year to buy a rental property could cost you 20, 40, or even $60,000, would you still wait? Most people think waiting is the safe choice, and they tell themselves, I'll wait until the rates drop, or I'll wait till prices come down. I'll wait till I have more money. Or they'll say, I'll wait until the market gets better. But here's the problem. While you're waiting, the market is moving. Rents are rising, properties are appreciating, and tenants are paying down a mortgage, and opportunities are disappearing. And what's the answer? Well, it's to pivot into real estate investing that does not require a 40-hour work week to manage. My name is Nancy Wallace-Laabs, and I've spent 20 years navigating the Dallas-Fort Worth real estate market. And today we're going to be talking about how waiting can cost you tens of thousands of dollars. So let's get into it. The big question I want to ask today is, if waiting one more year costs you $40,000, would you still wait? So most people think waiting is a good choice, that it's a safer choice. But in reality, it just costs you more money down the road. So in this presentation, I'm going to kind of demonstrate to you what I'm talking about. Let's look at some reasons why people wait. They might be waiting because they're thinking interest rates, as of this recording, interest rates are a little bit high if you're a first-time home buyer. But the good news is when you are a real estate investor, you always pay higher than your typical home buyer. So the rates really aren't that much different. So I just got a refi on one of my investment properties and I got like 6.75. So that's actually a good investment. So don't let interest rates scare you away. They will change. You always have the opportunity to refinance later on down the road. Fear of mistakes. How can you avoid fear of mistakes? Well, the first thing is you're watching this YouTube video, but that only goes so far. If you have a lot of fear around investing, thinking you're going to make a mistake, then what you need to do is reach out to a trusted mentor, someone that can guide you through the process. Buying rental properties is actually very simple. There's a process. There's steps. I talk about in other videos about the 3 numbers that you need and how you can get ready to purchase your first investment property. So it's not that it's hard. But sometimes in our mind, we kind of freak ourselves out about it. It does not have to be hard, but that is one of the reasons why people wait. So they talk to themselves about, oh, the interest rates are too high, or I need more money, or whatever it is. They're going to watch another YouTube video because they feel like they're just not ready. But you are ready. You just have to have the confidence that you have the information or you're working with the right person. Right now, what's kind of happening is that there's becoming more inventory on the market, which is a good thing, because when there's more inventory, what that means is that then it becomes more of a buyer's market. There's more negotiation on properties. Now, sellers haven't quite caught up to that yet, but given a little bit more time as we go into the summer, I think if the market continues the way it is, then by fall, it's going to be an awesome time to buy investment properties. And I know I'm already on the lookout right now. And I'm finding deals on the MLS because they've been sitting for so long. And the bottom line is that most people aren't waiting for a better opportunity. They're waiting for certainty, for clarity. But you know what? By the time certainty arrives, the opportunity is gone. In a buyer's market, or when it's competitive, like in the DFW area, or in Frisco, Texas, or in Orlando, Florida, we just missed out on a property by just a couple $1,000s because we didn't act fast enough with our offer and the right paperwork. So the first thing is that prices do move up. So you have to be aware of what's happening in the marketplace. Number 2, competition rises. So the more it becomes a buyer's market, the more investors are out there looking for deals, because that kind of triggers, like, everyone's like, oh, look, I can get these good deals. But then what happens is that floods the market with new investors, which, you would be one of them. So you have to kind of be able to act fast, know where you want to invest in. And then 3, the deals disappear. So if it's a good deal, it's going to be gone. So even in a buyer's market, things are going to be snapped up. So seller's market means that the seller has kind of more control. The prices are a little bit high. Competition is a little bit lower. In a buyer's market, it's ripe for investing. And that's what you need to be looking for, but you can't wait for it because again, it'll cost you money. So let's talk about the cost of waiting. So let's take the Dallas Fort Worth area and let's look at our property price of 300,000. A baseline of appreciation is 4%. I mean, that's pretty much standard across the US. Some places it's higher, some places it's lower, but here in the DFW area, 4% is a strong appreciation rate. So just by not buying that property today, I'm missing out on $12,000 of appreciation by the time next year rolls around. So in 12 months, I'm already going to lose $12,000. Now, is that on paper? Yes, it is. But the thing is if you wanted to sell the property in 2 years, 3 years, 4 years, multiply that $12,000 by 5 years, and that's $60,000. So just by waiting 12 months, it's only $12,000, but in 5 years, it's $60,000. And look at even in Orlando, because we've been marketing in Orlando. So look at a $400,000 property in Orlando. And again, let's use that 4% appreciation rate. And now we're missing out on 16,000 and then multiply that by 5. And that's actually more. That's closer to $70,000 that you are missing out because you didn't take the initiative today to purchase a property. And then we can bump it up to even a higher high-end property, which some people like to buy high-end properties for short-term rentals. You know, you can buy some nice properties for $600,000 that are actually worth $1 million and flip them if you've got that skill set. So again, we would use the same principle though of 4% interest, and again, missing out on $24,000. So let me just ask you this. If I said to you, I want to give you $12,000, $24,000, $16,000, would you just say no? When you don't start investing in real estate, that's what you're saying. You're saying, oh, I don't need another $12,000 a year, or I don't need another $60,000 in 5 years. That is the compounding value of real estate investing, that what you purchase today is going to be worth more money a year from now, 2 years from now, 5 years from now, that you are actually getting more value from your initial purchase as time goes on. Now I want to clue you into the hidden wealth builder inside real estate investing that we don't really talk about. When you have rental property, and again, I'm talking about single family properties, it's the tenant that is building your equity in that property. So you don't write the checks for that. Your tenant is doing that for you. So let's take that Dallas rental property at $300,000. When the tenant is paying rent, if you bought the property right, that tenant is going to be paying about $4,000 to $6,000 per year for rent. And that equity is gained from the tenant principal paydown. When the tenant makes their rent payment and then you apply that rent payment to your mortgage payment, guess what? The principal is being paid down. So not only are you gaining appreciation, you're gaining equity because you're owing less on the property than when you first started with the tenant. The hidden wealth factor is this. When you purchase a property and you've purchased it right, the tenant is now building your equity for you. So you're gaining appreciation and you're buying down the mortgage through the rent payments, which increases your equity. So that $300,000 property, you're going to owe less on it than when you purchased it because the tenant is the one who's paying down your debt. And that goes to your bottom line. This is how real wealth is created. Now, I'm here in the DFW area, but I do market in the Orlando area as well. Orlando is a good market, and I just want to show you a comparison between Dallas and Orlando and why I decided to go there. If you look at Dallas, it's got a strong job market. And when I talk about Dallas, I'm also talking about the surrounding areas, Fort Worth, Plano, McKinney. It has a steady population growth and consistent rental appreciation year after year. And so what does Orlando have? Well, it has a booming tourism and hospitality economy, which is great. You can have 3 different exit strategies. You could have a long-term rental, you could have a short-term rental, you could flip it. So what we're finding in Orlando is it's a great place to, even as a first-time investor, to purchase properties there. They're also seeing a great influx of people moving there. They have a lot of job opportunities there. The bottom line is in both markets, waiting costs real money. In Dallas, you can get in for $250,000 to $300,000. We actually found a property in Orlando. We missed it by just a couple thousand, but our offer was like 225 on a property that the ARV was 350. So we found pockets of Orlando that are booming and they are not in a flood zone. That's a plus. Let's talk about a wealth buster. That's what I like to call it. And that's when we start talking about interest rates. I love it when people are talking about, oh, they're waiting for the interest rates to drop. And, this year's been a little weird because they haven't been as fluctuating. But again, don't let that stop you from purchasing an investment property. Do I think the rates will go back? But the thing with investment properties is the interest rate is always a little higher. Number one, it's completely tax deductible. So, whatever you're spending on interest rates, remember it's tax deductible. Now, you also might have to get a hard money loan. And hard money loans are always higher interest rates, but you might need a hard money loan because you need to buy the property fast and it has renovations that no lender is going to loan to you. Interest rates cannot be a factor of why you're not buying an investment property. They become an important part of the overall cash flow, and you can always shop lenders. And depending on where you're at, I've used private money lenders where I can negotiate my own interest rate. Interest rates are just one formula in how to purchase rental properties, but it should not be that element that stops you. And that's why I'm saying it's the hidden wealth killer, because we get hung up on, oh my gosh, the interest rates are so high. And just remember, as investors, that's okay. So let's talk about when the market shifts. Then what? What do you do then? If you've bought a property and then it shifts a little bit and the property value went down a little bit. This is why I'm saying even if you make a mistake buying a rental property, even if you're off on your numbers like $10,000, $15,000, you know what? That's actually going to be okay because over time you will recoup that. And that's the cool thing about investing in real estate is that, you can make these mistakes. Sometimes you want to hold it so that the market catches up to it. And that's really what a moving market is all about. So when there's change going on, rents are still being paid. There's still long-term appreciation. Market fluctuations are important to real estate investors is in the buy process. Because again, if it's a buyer's market, then there's going to be more competition, but there's going to be more properties as well. If it's a seller's market, then that means there's going to be bidding wars. It's going to be harder to secure properties at a discount because that's what we're always talking about. And when we look at real estate investing, it's not always money. It's not always financial. It's time. It's the time that you're missing out on building more retirement, missing out on opportunities, delayed options that maybe you could have had, and delayed freedom. So what do I mean by all of that? Just basically, you can jump into real estate investing no matter what the market is doing. You can always jump into it. It just depends on how long you're going to wait to start taking action. And that's what it comes down to, because the longer you delay, then the less time you have to build wealth. So if you're like me, I started a little bit later in life. If only I knew what I knew when I was much younger, and I would be in a much stronger place than I am today. So time is the thing that you're missing out on. Yes, it's money on paper. Yes, and it's the time that you are missing out on all the opportunities that you could be getting. So you really have to take on your objections. What are your objections to investing in real estate? If you've been following me or you've been watching other YouTube videos, is your main concern that you might make a mistake? The reality of the situation is that most deals are not perfect. There's always something going on. In my whole years of investing, I probably haven't had one time where everything went according to plan. But you have to learn how to adjust. You have to learn how to compensate. But the thing that always stayed true was the numbers. So as long as you know your numbers, you're going to be fine. Have I overpaid a little? Yes, I have. Have I underestimated repairs? Yes, I have. But those are lessons that I learned the hard way. Even if you make a mistake, it's okay. In real estate, it's very forgiving because of the time factor. And you need to keep this in perspective. A small mistake on a first deal, you're going to learn so much. And you're like, okay, and I can guarantee you whatever mistake you make, you won't make that same mistake again. And that's the beauty of it, is that you're learning and you're building a foundation of becoming a great real estate investor and really building that portfolio that you've always wanted to. What should you be focusing on? Well, number one, the wealth is built over time. It's a long-term outcome. And we're focusing on cash flow and appreciation And you're learning the steps so that you can minimize your risk. So if you know what the numbers are, what the market is doing, where you're trying to buy, all of those things, then you manage your risk. You don't have to know every single strategy to get going in real estate investing. You just need to know the one strategy. I want you to know that you can do this if you're still working a full-time job. And then you can get going, and the process is very simple. So you study markets and financing. That's what you're going to do. I'm always into single-family homes, and I have my buy box. And then I'm going to analyze the numbers. And this is really where you can get to be an expert at. You don't even have to be an investor yet. You can analyze. If you have a calculator, you have a phone, you can figure out the numbers. It's a formula that you follow, and it's very easy to implement and apply to any property. And if the numbers don't work, you just walk away. And then finally, you need to learn how to negotiate and close on properties with sellers. How do you take that step and get the deal? One rental property can change the trajectory of your income. So the best time to invest was years ago. The second best time is when you're financially prepared and educated enough to take those steps. So the biggest risk that you will find in real estate investing is not taking any action, and then you end up missing out on potential opportunities. One imperfect deal with knowledge and intention will always outperform the perfect deal that never happens.